In the equity quadrant, taking a look at the September S&P futures contract, which is holding in a small rally in the afternoon, produced the third straight day of higher prices for the S&P as we got in toward the close. We finished closer to the highs than to the lows. On the high today, 38.70 was up just short of 1%. On the lows today, 38.08.75. Down just between 0.6% and 0.7% from the settlement yesterday of 38.34. Today's close in the September S&P futures brings the price back above the drop to the 20% threshold from that all-time high that indicates a bear market. Now, technically, that does not mean we're out of a bear market. The way we technically get out of a bear market is to get to a new all-time high. Now, since the low close of June 16th, the September S&P is up just short of 5.5%. We've actually been up more than that. Today, we finished with us down 19.5% from that all-time high. A couple of days ago, we were up about 18.5%, so we've fallen from that level. So overall, pretty constructive, forming a medium-term bottom, although volume was very low today. Now, the FOMC minutes drove the second half rally today that we got, the extended rally that lasted in toward the close. Inflation was mentioned multiple times in the FOMC minutes. As a matter of fact, 90 times by some counts. But recession was not mentioned, not at all. So it didn't seem like the Fed was discussing the possibility of a hard landing or a recession. They were only looking at it from the perspective of a soft landing, which is why U.S. yields moved so much today. Yields were down early, then they recovered and rose versus yesterday's settlement. Earlier in the day, everything but the 3-month yield was down. As we got later in the day, the 2-year was actually up 15 basis points, the 5-year up 14 basis points, the 10-year up 10, and the 30-year up 7, although the 2s, 10s, and the 5s, 10s still inverted. The 2-10s inversion actually got a little bit worse, about 5 basis points now on that inversion. But the S&P still finished higher on the day.